so many people are starting companies and it's getting easier to start a company. Like, should I start a company now? Like everybody else is starting a company and it's so competitive. And at least my view is, I think it'll get easier and easier to start a company. Like, I think waiting doesn't help. The learning around how do you sell, how do you service a customer, how do you manage your finances, like all of that is so valuable, no matter what you do in life, right? Like,
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Arun Penmetsa on the mic. He is a partner at Storm Ventures, an early stage VC firm focused on building enterprise leaders. Arun leads investments across SaaS, cybersecurity, and digital health. And before stepping into venture, he built enterprise software products at Oracle and was part of the early Google Apps for Enterprise team. Very interesting. He brings a rare mix of deep technical grounding and over a decade of early stage investing experience. Thanks for coming on, Arun.
yeah, great to be here. Thanks for having me.
Yeah, so I'd love to start with your origin story. What is your background?
Yeah, so I was born and raised in India. I came to the US for undergrad many years ago now. I would say I have a somewhat traditional engineering background, undergrad and master's in computer engineering. And then I spent, as you briefly mentioned, about 5 years, briefly at Google, but mostly at Oracle, working with enterprise teams there. And then business school, and then I joined Storm about more than 11 years ago now. So time has really flown by.
Yeah, I mean, it's very, very standard background for Silicon Valley. You started your career building enterprise infrastructure. What did that teach you about, deploying capital today? Like, what do you kind of still draw on from your Oracle and Google days?
Yeah, so it's interesting if you think about just how technology trends evolve. Every time there's a new wave, the infrastructure tends to get built first, the picks and shovels, as people say. And then eventually you get to the application layer, because a lot of the applications require that infrastructure to truly scale. Obviously, being at Google for a little bit and then Oracle, it was a completely different time. And this was like 15 plus years ago. The cloud was just starting out. The companies were moving their products to the cloud, and it was still very, very early days. But it was interesting to see that trend from the perspective of, let's say, someone like Oracle, who even today, and obviously at that time too, had a massive customer base. And at least for someone like me who was just out of college, it was great to get the perspective of being able to watch these large companies support their customers through a technology transition. One of the benefits of being at these companies was that you didn't have to go find customers, right? Like they already had these customers. They would come to your HQ for briefings. And it was a wonderful experience to interact with them, understand how they thought about buying software, what their priorities were, how would sales, marketing, customer success, engineering, everybody work together. So I think that was helpful as I think today, and obviously it's a different world right now, given everything of how these big businesses operate and how they think about their incentives when they're adopting new technology.
So at what point did you realize that you wanted to move from building products to backing the people building the products?
Yeah, I mean, there wasn't any master plan or anything like that. So after Oracle, I'd applied to business school, and I was fortunate to go here at Stanford. And so I happened to meet a lot of investors on campus, either teaching classes or there were guests in classes. And I just got more curious about venture. So it's an interesting story. I literally cold emailed a number of GSB alumni who were in venture at that time. And I was just curious, what their journey was, what it takes to become an investor. And I think maybe this speaks to one of the strengths of going to business school there. But I would say 80-90% of them responded, and they were open to having a short conversation. And yeah, eventually I ended up at Storm over the summer, and that
you're almost obligated, right, to take those calls.
Yeah, I mean,
those alumni reach outs. I take them. You said 80-90%. I probably take most of them as well.
Most of them, yeah. I think that's one of the benefits, especially because being in the Valley, there's such a good concentration of alumni here as well. So it kind of works out well.
I have a question for you, actually. And I want to get back to your story of GSB, because I have an intern, I won't say his name, that's been working on Team Ignite for a while. I have actually two, one that got into Berkeley and deferred. I have another guy who's applying now to get his MBA. Do you think it's necessary or helpful? I guess that's a two-sided question. We'll take both parts of that. To get an MBA to work in venture, is it helpful? and necessary?
So I don't think it's necessary at all. There are many paths into venture, as you know. I think if having an operating background, especially in today's era where you're building a lot yourself, I think is probably a really good way. I think what's helpful is if you don't have an established network to source from or to help you with diligence or to kind of break in, it can be helpful to have a network from a top tier MBA school to kind of get started. And let's say in my case, I was coming from a pure tech background. I didn't know really anything about investing or finance or all those areas. So having that network definitely helped a little bit. I was living here, so I did have an established network through my colleagues, the school I went to and so forth. But I think it can be helpful if you don't have that. So yeah, that would be my view.
Yeah, I think especially if you come from an engineering background and you've never operated, you've never shipped a product other than you've coded products, but you've never like ran an org that shipped a product,
right.
Or you never went 0 to 1 as a founder or anything like that. You don't have the business side of things. You're very
That's
strong technically.
Yeah,
I think it could be,
but
useful
I don't
for
think
that.
it's necessary, as you said, at all, right? I mean, I think the best learning is just by doing, right? So if you go work at a startup, you'll get that experience.
Or start a startup. Yeah.
Or start a company.
That's probably the best. Yeah. That's what I
trial
tell young
by fire.
people. I'm like, don't try to work in VC. I mean, get, intern at a VC, whatever, get some experience, but, or be an associate, but like go start a startup as soon as you can.
Exactly.
Especially today. There's just so much greenfield opportunity out there.
And it's never been easier to start a company, given all the infrastructure and resources and tooling you have today.
So you're reaching out to your network, you're getting some informational interviews, as they say. And then at some point you landed as an associate at Storm. Tell us about that.
Yeah. So I spent the summer here at Storm. It was a great experience. I mean, Storm, and I can talk more about the firm, but it's a relatively small team. It's been around now for a little over 25 years, a great track record. And I have to really credit the culture at Storm because I got great mentorship over the summer. Everybody engaged with me really well. And again, because it's a small firm, it's just partners. Everybody kind of does their own work.
Kind of like a benchmark model. Everybody's a partner. Everybody does their work. Yeah,
that's right. So everybody did their own work and I was involved. We didn't actually end up doing a deal when I was there over the summer.
Wow. So it's a very concentrated firm. So you guys are sitting on boards, writing bigger checks and...
Yeah. So I would say we're relatively concentrated and the number of deals per year fluctuates. It depends. Some years we may do like 6 to 8. Some years we may do 3 to 4. But we obviously spent time looking at a lot when I was there. And I really enjoyed it. And I really enjoyed working with the team. So when I graduated, I was fortunate to have, I met the team after I graduated and I was fortunate to get an offer. And now it's 11 years later.
That's awesome. What was the biggest adjustment for you, going through GSB and shifting into investor mode?
Yeah, I think between operating and investing, I guess there's a couple of things you really need to think about. One is you are looking at many different opportunities, whether it's new investments or companies you've already invested in. So I think you need to be able to context switch quite often, right? But still be present and very thoughtful about each engagement. So a simple example would be, as you go through the day, you may meet 4, 5, 6 companies, and each of them may be doing slightly different things in different sectors at different stages. I mean, generally because we're early stage, the stage doesn't vary too much, but you could have like at founding or a little bit later.
That is the hardest thing actually about being a VC is the context switching, I think.
Yeah.
Because every half hour is something different.
Exactly. But you still have to be present. You have to think through, because this could be the next big deal, right? So, and I think that is a muscle I think you need to build. And obviously this happens with portfolio too, right? You can have a board meeting, then you can go to a different company and, my founders call me all the time or text me. So I think that's one aspect. The second is, I think as investors, we have to be comfortable sort of realizing that we don't have as much control over the business, even though you obviously hear stories about investors being very involved. And I think there's a lot of value we can add, but ultimately it's the founders that are running the ship, right? And that's the way you want it. I mean, ultimately you back this team to go execute and you want to support them in whatever way you can. And obviously not every, as you know, most investments probably don't work out as well, but that the idea that you have limited information ultimately because you're not in the company day to day and being able to still be helpful and thoughtful in the kind of advice you give and the questions you ask is a delicate balance. Because, when things are not going well, if you come from an operating background, or I suppose any background, the instinct maybe to like, oh, I want to roll up my sleeves and help, but you have very little information in most cases, and you have to be careful how you show up in that moment as an investor, because it has a huge impact on the team.
Yeah, it's a delicate dance. So you guys have a long-standing focus on enterprise. And how do you kind of keep that focus and stay disciplined over all the different hype cycles that that have occurred over the last 11 years that you've been there?
Right. So I think, first of all, I think enterprise, and it's B2B more broadly. So it's not like we're only looking for companies that sell into large customers.
Could be like SMB, B2B, things like that. Yeah,
exactly. Yeah. So I think one, obviously it's a very big market. Huge amount of software spend goes into these companies as they procure products. I think two, the team realized over the years, and Storm, the team has been investing together in some form since 99, that one of the key aspects of selling into these businesses is the way you go to market has a lot of similarities across sectors. So whether you're selling into cybersecurity or or sales tech or healthcare, obviously every sector has some nuance, and the way they buy, there's potentially regulation, the sales cycles are different and so forth. But the way businesses make decisions, the way incentives are set up, the way you go to your champion, then you have to convince the rest of the org, including finance and procurement. There's similarities across sectors and businesses that you can learn and work on over time. So one of the things that the team has really developed over the is this really deep understanding of go to market, whether it's sales led, whether it's product led, whether it's using channel or marketing led. And we realized that using that context and playbooks that we've built can be beneficial no matter, like I said, whether you're selling to hospitality or you're selling to healthcare or some other sector. So the combination of, one, this is a very big market, and two, the expertise we've built on the go-to-market side is what keeps us really excited about this, because we think we can find good opportunities, but also help these companies, as we say, get to unlock, as we say, they're able to unlock growth, which is essentially go from that early product market fit stage to a stage where they can predictably scale growth. So I think that's interesting. And the last thing I'll say is, I think B2B also in some ways tends to come a little bit after the hype, because these are larger companies making decisions. So it's not like a trend hits it and then the next year everybody's buying it, right? It's more measured.
Yeah. It's like, Web3, we'll do that. Yeah, that's great. Exactly. No, they're going to evaluate it and say, how does this drive, how does this save us money or save us time?
Yeah.
Primarily, right?
If you think about AI, right, as a trend, and we can definitely talk about that. Now we're seeing a lot of adoption, but 18 months ago, a lot of people in CIOs, CTOs, CPOs, they were trialing products. They weren't ready to jump in and get everything deployed, right? So there's time and there's a playbook you can run to get these companies successful.
Love that. So what is that playbook? For founders listening, why would they want to take money from Storm? What have you guys have developed, and how do you guys help founders repeatedly get to that product market fit? Let's say go 0 to 1, 1 to 10, things like that.
Yeah. So I think a lot of the learnings, one of my partners, Tehi, he's actually written books on this, and there's a website called Survival to Thrival where he's published a lot of this. But the brief summary of it is we think a lot of go-to-market playbooks tend to are more internal facing to the company selling. So if you think about the traditional pipeline, right, you get an MQ, you qualify it, then you go to the SAL, SQL, and there's a whole sort of sales pipeline. That, in our view, is great. And obviously every company needs to run it, but it's very internal facing. And ultimately, it doesn't really address what is happening in the customer during the sales cycle. So one of the things we encourage our companies to really do is in parallel, build a customer journey that mirrors the stages in your sales pipeline. So thinking through, what is the urgent pain that you're solving? And we spend a lot of time with our companies on urgency, because we really try to understand, is the problem you're addressing truly urgent? Like, do they need the solution today?
Yeah, is it a hair on fire problem, or is it just like a nice to solve problem someday?
Yeah. There's many sort of ways of saying it, right? Like painkiller versus vitamin and all this kind of stuff.
Yeah.
So we document that. Then we think about, okay, you really found a hair on fire problem, but why would they pick you? What do you have to say in the sales cycle? And we call them wow factors, and there's many different names for it as well. And as you go through the sales process, we encourage our companies to, and we work with them on this. Literally I've sat in 3-hour long sessions going through each prospect We encourage them to come up with these wow factors for every meeting that you're coming up with, because essentially we need something that will get you to the next meeting, right? And then we talk about how do you convince the finance team, how do you convince procurement, how do you convince the executive team, what are the things you need to build into your sales process to do that. And it's not like we have a right answer for each of these questions, but I think what ends up happening is a lot of this information is in the founder's head when they start, because the founders are the ones who are truly understand the market. They're very passionate. They're able to go sell and convince those initial customers. But when you bring in a sales team or even the first AE, oftentimes downloading those insights from the founder into a playbook that you can give to a rep and say, go execute this because we've figured all this out, is a big sort of stopgap in the growth of a startup. And we are trying to bridge that. So a lot of our efforts are like, we sit with the team, with the sales folks, the marketing folks, the product folks, the founders, and then try to build this out when we invest, right? So that's sort of the, I don't know, really high overview.
Yeah.
There's
And a lot of founders need that help too, right?
Yeah.
I mean, because a lot of founders are usually a couple technical people, maybe a product guy and a technical coder, CTO kind of guy or gal, and they need help on the GTM. That's very common.
That's right. And in many cases, the information is in their head. It's not structured in a way where you can just give it to someone, right? But it's in their head. And we see a few times this plays out, right? Great team, they hire a really good AE or a head of sales, and the instinct of the founders is, well, it can go in both ways. But one is they continue to be hands-on, which can cause some friction, because if you don't have a playbook, then the founder is like still selling, or like there's a different methodology, or they say, I've hired these great people, I'm going to step back, which is also a gap because that knowledge is now not passing on to the team. So anyway, that's what we think one of the, which is why, I mentioned this concept of unlock growth, right? Like, we believe when you go from product market fit to scaling, there's like a step in the middle where you have to like unlock the growth before you can scale it. So a lot of our methodology is focused on doing that. Now, again, I'm using a lot of terms here, but
yeah. I'd love to unpack
level,
the 3 stages that you just talked, like you just
yeah.
breeze right through them.
Yeah.
Like one, I'd like to like, from a Storm perspective, the Storm Ventures, what does product market fit look like for you guys?
Yeah. So I think for us, product market fit ultimately goes back to urgency, right? There are different ways to look at it. How many customers you have, how much revenue you have. When we meet
conversion rates, churn rates. Yeah.
Exactly, right. And I think a lot of those are like symptoms of what you are essentially trying to achieve. And for us, what we believe is if you can truly find something that's urgent and the customer desperately needs it, I think that's the first step to finding product market fit. Right. I mean, obviously, I don't think any decent startup is building something that nobody wants, right? But I think
sometimes they are.
Sometimes they are. Yeah.
At least half, because half go out of business, right?
Yeah.
On average.
Well, I think there are other reasons they go out of business, right? I think if you get customers, I think there is value you're delivering. But I think the challenge is, especially when a market turns, you are not in those top 1, 2, 3, 4 things that they need, right? And we see this all the time. I mean, there are customers who keep piloting your product, but they never pay. You see customers who say we don't have budget, and which is a genuine problem. But anyway, so I think if we can truly get to urgency, and that's what we're trying to find out through the first 10 customers, like, have you truly struck oil? Right. Yeah. And it's not easy to figure that out. And, if we knew how to figure that out, all our companies would be successful.
Right.
But I think that's the way I think about product market fit.
You've seen a lot in 11 years. What do you think's changed about go-to-market over the last 11 years? I mean, you have a lot of AI SDR, AI outreach, AI ads, AI this and that. What's changed? What remains the same?
Yeah, I think what's changed is how automated things have gotten, right? I mean, 11 years is not that long a time, but, a couple of decades ago, you had to get on a plane, sort of go sell, especially if you're selling to larger companies and the product is a bit more complex. Since that, we've gone through the SaaS wave where things can be sold online. Marketing has played a much bigger part. We've gone through product-led growth cycles where the product itself has gotten so simple that somebody can download it and ship it. Cloud marketplaces have come about in the last decade or so. So you can go to AWS Marketplace and say, I want to buy this.
I came from AWS Marketplace and Azure Marketplace. I ran the category team at Azure, actually. How are you guys leveraging that in your portfolio? Would love to hear the latest.
So we are in the early stages, a handful of companies. Actually, you may be, this is maybe a side discussion and we can do it later, but we're actually investors in a company called Flywheel, that is kind of building out the buyer side platform for cloud marketplaces. And that team came from AWS Marketplace as well.
Oh, wow. Okay.
So they're trying to automate that entire journey from when a procurement person decides to buy to connecting with the vendor on the other side, automating the transaction, and making it much easier to find more of these deals. So
yeah, there's some unicorns on the seller side too, like Tackle and
you're right. So anyway, so that's a new phenomenon probably in the last decade. So I think there's a lot more automation in how you find information about your buyers, reach out to them, move them through the journey, build out the playbooks and all that. I think what's not changed is still kind of going back to the basics about, like I mentioned, right? Like, why are they buying your product? How do you price things? How do you think about the incentives of your buyer in there? How do you think about making them look good? How do you think about showing ROI so they can go to their CFO and fight for the budget that you want them to fight for, right? How do you manage churn? Even though there's some automation there too today. So I think the way and the reasons people buy is still the same. You can move them through the process faster. You have more data to leverage today than maybe 15, 20 years ago. I mean, there's companies in the portfolio you can talk about, there's this whole category of revenue intelligence today that didn't exist 15, 20 years ago on how do you really think about each customer, the revenue potential, risk, expansion, all of that. So that's some ways I think things have changed, but in other ways not.
So what stages are you guys investing again?
So there's some variance, but I would say the traditional target would be sort of late seed and Series A. I like to call it traditional Series A because we write checks sort of in the $2 to $6 million range.
Yeah, which is kind of seed now. Yeah.
Which is kind of seed now, right?
Yeah.
$50 million A's.
Yeah.
Fund 7, which we're investing out of right now, is $230 million. So that would be the ballpark. In some cases, we've gone early. Like Flywheel was one where we invested at inception because we had a thesis in the space. It's a great team and they're doing very well. So in some cases, we go early, but that would be sort of the one I mentioned previously would be the sweet spot.
Got it. And then what's the kind of the scorecard look like internally for you guys? How do you guys make decisions? What's important to you? And what might be differentiated versus other VC firms that you know?
Yeah. So I think there's a lot of commonalities to other firms. I mean, obviously the team matters a lot. I mean, given that we invest early and we tend to be very long-term oriented.
Yeah. Somebody on my podcast, I forget who it was, like, I care about 5 things and the first 3 are people.
Right. Yeah. And I think that's true in many cases, right?
Yeah.
It also goes back to what I said earlier. Ultimately, they are driving the ship, and no matter how much influence or control you think you have, it's actually very little, right?
Yeah. You're more like a coach. Yeah. You're on the sideline and you can't even call plays. It's not even like being a coach. It's more like being like, I don't know, some sort of junior assistant coach that doesn't call plays.
I mean, yeah, you're absolutely right. I mean that happens a lot. And it's interesting. Ideally, listen, I want to be involved and I do tend to get involved in some aspects with my companies, but ideally you want a company that's doing well where you don't have to do anything, right? Like that's
what I tell my LPs is like, the best companies don't need my help. They don't need Team Ignite.
Exactly.
I never hear from them. I just get their Series A, B, and C announcements, and I'm like,
exactly,
great,
right? So that's the best case scenario.
Yeah.
So the number one, as you said, is team, right? Then we try to have a good thesis on the market. We look at, this Storm through its history has done 200 plus investments. So we have a good sense, although markets change really quickly.
Right.
We have a good sense, and I would say network in some of these markets where we try to have a view on what companies are doing. And the third, I think, is sort of the go-to-market side. Like we really want to understand, is the product they're building and the team really well tied to the go-to-market they want to pursue? And it's not like you can't, like if you're doing a sales-led motion, then the way the product is structured and the way pricing is set up has to support a sales-led motion. Like the economics have to work out. And that's a very simple example, but we think a lot about those things. And can we truly help here? Because if the economics are off there, it's just very hard to build a business. You may need a tailwind or something in the market to really pull you along. So yeah, those are maybe 3 or 4 things. Like I would say team, the market/urgency thing is something we think a lot about.
Yeah. And then severity. Yeah.
Yeah. And then we think about sort of the go-to-market. There's probably other factors. Like we think about, obviously we think about traction, how fast you're growing and all these other things. But if I had to boil it down, it's probably those 3 things.
Yeah. I love that. How do you guys assess, as I look at a lot of early stage companies, a struggle I have as an investor is assessing the bundling risk of the incumbents.
Yeah.
I'll look at something really interesting and I go, ooh, that's kind of a feature inside of somebody else's platform. Like, how do
Yeah.
you make that decision?
So one of the things we do quite a bit and is we spend a lot of time with the teams on their product roadmap, whether it's new companies that we're investing in or even an existing portfolio, because the market's evolved, right? We invested 4 years ago on a certain thesis and the market has shifted. So we spend a lot of time with the founders on how do they think about building this product in the next 2, 3, 4, 5 years. And even though you have an insertion point today that feels like it's something that could get bundled, do you have the appropriate, or at least you're thinking about it the right way, where you're either collecting a set of data or you're building into a certain set of workflows
Is there a
where,
moat here that will
yeah,
form over
yeah,
time or now? Yeah.
yeah. And people have different views on what is truly a moat, but I think ultimately from a buyer perspective, if something is working really well and it's getting their job done and making them look good, like it takes a lot to remove that and put something new in, right? And this obviously comes up with AI all the time today, right? Like every company. So anyway, to answer your question, we try to spend a lot of time in product roadmap, and we try to be thoughtful about it. We try to think through, how does the founder think about the next 3 years? Like, have they thought about, okay, the wedge product? And I know when you're starting the company and you're early, like you have 100 things going on as a founder, and you may not have thought 18 months ahead, 36 months ahead. But that is something we really try to understand.
Yeah. What has changed over time, over the last 10 years, 11 years that you've been there? What have you guys like kind of incorporated where you're like, you know what, we made a mistake and we've learned that mistake, and now when we see that again, we don't invest? Is there anything like that where you're kind of like red flag, yellow flag?
Yeah.
Not gonna bet. We've seen the story before. We know it doesn't work.
Yeah. I would say like go to market mismatch is something we're very careful about. And again, it's not like a black and white answer, because there's shades of gray here. But we've seen as an example, and we can advise them, but it's not like we don't want to invest and say change what you're doing, right? Because we want ultimately the founders to build what they authentically think is the right thing to do. But as an example, we've seen companies that hire a sales team and sell 10K price point, right? And I understand in the early days you have to do whatever it takes to get customers, but then we looked at the product roadmap. There's really no viable path to driving expansion, right? You have to move up market quickly because the math just won't work. And I'm giving maybe a simplistic answer here, but I would say that's one. The other thing, which is maybe an obvious one, is we tend to spend, I would say, a fair bit of time now with founders, especially founding teams together. And this is maybe more my learning. Like in the early days, I was trying to do my first deals. I was trying to get them done. But I think just understanding founder dynamics, can the two, three, four co-founders, how they work together, what are their strengths, where's sort of the gap in the team that we may need to help support. That's something we think a lot about as well, because that's probably the most painful one when you have founder conflicts after you invested, because it's just hard to recover from that kind of stuff.
Yeah, you guys have done a lot of cybersecurity. What is some common things you've seen that creates a platform versus a feature?
Yeah, I think there's a few things. I think one is, especially for the larger platforms, do you have an asset inside the customer's environment? I think that matters a lot, especially these days. And if you think about the bigger platforms like CrowdStrike, Palo Alto, Zscaler, I think them having that footprint inside customer environments helps a lot. Whether you're inline and you're looking at the data constantly, I think matters a lot, especially now with AI and how the things are changing. Cybersecurity is always interesting because it feels like there's always budget, but there's like a million companies all vying for that budget.
Yeah, and it shifts so much too. So it's a great place to invest because it's, every 3 to 5 years there's just a new edge that you have to protect.
Exactly. Yeah, and there's a new piece of software with an acronym that you need to buy. But those are some things I think companies do well. We recently, one of our companies was bought by CrowdStrike, and they had a really interesting product. They started out sort of in the browser security space and expanded from there to endpoint. But that was, I think, one of the big reasons they were bought, is they were giving a perspective on what was happening on the device that was hard to get for the platforms.
One thing that's changed recently is, I feel like the essence of what it means to be capital efficient has shifted, especially over the last 5 years. How have you seen that in your portfolio play out?
Yeah. So for the companies that we've invested in recently, there's a handful that are growing well and quite efficiently. I think it ultimately goes back to what kind of product you're building. If you can get a go-to-market that's more product-led, I think you'll be very, very efficient. I think if you can automate parts of the sales process through the AI tools, I think you can get very efficient. A lot of our companies do sell into large enterprises, and in those cases, you still need people to go and communicate and manage deals, and there it's harder. But just the whole go-to-market process is getting more efficient with these AI tools. So we've seen some of that. It's nowhere close, I think, at least what I've seen, to what we see with sort of the B2C use cases like the Lovables and sort of those companies, and how efficient they can get with
prosumer kind of approaches.
prosumer kind of things. But we have seen in a handful of cases just sales efficiency go up. I mean, the difference is, if you are, I think the other thing we've seen is the pace of product launches is getting faster across the portfolio, which also means if you do a good job, your net retention is higher. So it's okay to be a little bit inefficient early on, but it doesn't take you 12 months or 18 months to launch your next product. You can probably launch your next product in 3 months, as an example, right? So you can start driving expansion up much quicker. So over time, hopefully, these companies will need to raise less. But I still think we're kind of in the very early days on the B2B side and how that plays out. But I can see a path on how these companies can get much more efficient.
A big refrain I hear online is, there is no technical differentiation. Do you believe that? And what have you seen over the last 5 years?
Yeah. So I think it depends on what you mean by technical differentiation, right? And where in the stack you're building. I think if you're more on the infrastructure side, I think depending on who you're pulling from data from and who you're integrated with, there's probably a little bit of differentiation in the sense that it's not easy to build what you build. There's risk that a cloud vendor can offer the solution, but in general, they tend to be more horizontal and not best of breed in any individual one. So I think you can do that. If you go more to the application layer, I think it's harder to build truly something that's technically different because you own so little of the stack. But I think where you can differentiate, like we talked about earlier, right, is you get access to a data set that is hard to get access to. You embed deeply in workflow. So you're just managing a lot of what the customers are doing and you're just taking that over, right? So, it's interesting for some of our companies. They have this data set, they start doing one workflow, now they're doing 2, 5, 10, 15. And at some point, because AI is running a lot of it in the back end, even the end customer doesn't know exactly what in their workflow is done by this company's product, right? Because the results show up or the output shows up and you don't fully know which parts of that workflow are automated. So the risk of pulling them out can be quite large because you don't even know. Like before, it would be like, if I have a SaaS product, I know like this is the dashboard, this is the API. If I cut off the API, I know exactly this is what will happen. But you can get so far embedded now with AI that you just don't even know. And then obviously you can personalize to a company's workflow. You can fine tune to their sort of use cases and data. So I think at the application layer, you have to do some version of that. I also think some verticals are interesting. Like if you think about healthcare, and I do a little bit there, where there's all this nuance and regulation that is, I think it's not the focus for the broader models to really go fix, right? And you need to spend a lot of time in this space to do that. So even those are opportunities today.
So if you were starting a company today, which layer on the enterprise feels most ripe for reinvention?
I think multiple layers can be. I think we're very early on the application side. And I think that's true of most waves, right? As I mentioned earlier, the infrastructure gets built out first because that's where the initial opportunity is. People build on top of that. Otherwise, you have to go build the full stack yourself. Then you get some.
What's interesting about AI is it kind of started at, you might call it it's foundational model layer, but it's really the platform layer.
Yeah.
But then it kind of like whipsawed down.
Yes.
To the chips.
Yeah.
And now it's whipsawing up, or maybe even further down to energy. But now it's kind of going back up the stack as well.
Yeah. I think it's just changing so fast that people have had to reinvent more of the stack quickly to realize the potential, right? It's just really interesting because if you think about the cloud wave, which obviously was a very big wave, a lot of the benefits initially were somewhat invisible to most people, right? Like you had to go convince a company, hey, move to the cloud, you'll get savings over the next 2, 3, 4, 5 years.
Digital transformation is what we called it at Microsoft.
Make this huge initial investment, but there's value. And I fully believe in that. Like there's a lot of value.
Oh yeah.
But even now, after all these years, it's not like everybody's converted to the cloud. We're still sort of, I would say.
No, there's still the laggards out there. And I think we're probably just right in the middle if you kind of do the crossing the chasm bell
That's
curve.
right.
We're probably right in the middle of digital
We're still, yeah,
transformation.
maybe early to mid innings, right?
Yeah.
But I think with AI, because the consumers can see it, like it's like the phone moment, right? The mobile phone moment, the iPhone moment.
Yeah.
Really, the demand picked up so quickly that, as you said, people were building the models. Then people realized, oh, this thing actually works, and look at all this demand I'm getting. I have to like make everything more efficient to serve it. Otherwise, the costs. It's not like the big B2B companies would spend 50 million upfront to like deploy you in the cloud, and then you kind of figure it out over time, right? So as you said, then you go down, you create better chips for it, you figure out energy sources, and then eventually you get to the application stages, and I
Yeah.
think we're still early in the application. I mean, obviously there's some great examples out there of companies doing really well, but I would say a small percentage of the workflows in the enterprise are truly
It still takes
leveraging. Yeah,
15 years for it to play
yeah,
itself out, right?
yeah. Well, I mean, we'll see. I mean, a lot of people are betting that it's faster, but it's probably in that range,
Yeah.
right? So, and especially if you think about other verticals, like, as I mentioned, healthcare or construction or oil and gas, where every decision you make is very consequential. It's not like and I'm sort of
Yeah.
oversimplifying this, but like,
Yeah. You can't have like 1/9 of accuracy. You need
yeah,
like
exactly, right? It's not
five
like a
nines of
Bible type
accuracy.
email that suddenly
Yeah.
like went out. It's like the reading a patient's
Somebody's life on a rig
yeah,
or something.
that's right.
Yeah.
So
Much,
you
much
are going to
higher
be
stakes.
much more careful, which is why we are seeing this entire wave of, simulation labs and guardrails and all these other wave of
Right.
companies. This is the tooling that's getting built out, right? And then I think we'll get to true applications. Because I think we are still very early in seeing, if you go back to sort of the iPhone era, like seeing the big, like the Facebooks of the world, those, the Twitters and
I mean,
all
you
the
could argue
apps.
that Facebook and social media was kind of a late internet thing.
Yeah,
And
yeah,
then,
you're right.
and then the iPhone created a new platform and, the Ubers, and the
Yeah,
other,
Uber is a better
unicorn.
example. You're right. Yeah,
Yeah.
yeah.
That took 10 years really.
That took a while, right?
Yeah.
And if you look at the cloud wave and you think about the Datadogs of the world and all, they took a few years to emerge as well. So I
Right.
think we'll see those companies coming up. Hopefully, some of those are in our portfolio, but I think that'll come out in the next couple of years.
Right. So what do you think people are underestimating over the next decade in the enterprise shift?
I think some things will change in the way products are built and delivered and used. And I think some things will still stay the same. I don't think we'll see as much job losses as people are fearing. We'll see some, and we'll see some shifts. There's certain kind of tasks that will fully be automated. I think when you're buying products for your business or you're buying from a business, there is a level of support and reliability and assurance and planning and all this that's required that will always require humans. Now, what those humans are doing will change. And in fact, like some of the early studies that have come out, right, are showing that, right? In some cases, AI has improved productivity, but in many cases, that time is just moved to some other work, right? So it's not like people have more time; they're just doing more work now, right?
Right.
And I
Right.
guess you could classify that as productivity in the sense that more work is being done per person. So we'll see how it plays out. But I think there'll always be something to do as we build products, especially in complex industries. So yeah, so I don't think we'll see the level of job losses that people are fearing.
I don't think so either. Yeah. But speaking of, market overreactions, recently we had the SaaS apocalypse, right? Where a
Yeah,
lot of SaaS companies lost
yeah,
50-70% of their value seemingly overnight.
yeah.
Do you feel like that's just a market overreaction, or do you feel like the incumbents, like, I don't know, Salesforce and other SaaS players like that, are really threatened in this new
So
wave of like,
yeah, so I think AI is definitely a real trend that will impact these businesses. I think the stock market reaction is overblown. I think the way that SaaS companies operate will evolve to incorporate AI. So with the way I think about it, it's not SaaS, it's like AI plus SaaS. So it'll just look different. And you still have to do these workflows. I don't think AI will do everything for you for a while, at least. And depending on where you are in that stack, you're at different layers, different levels of risk, right? If you are a pure UI layer analytics product, then you're probably at significant risk because the product can be replaced quickly. And there's a lot around the business, like I said, around support and reliability and all that. So it's not like you'll suddenly drop off a cliff. But if you're further down and you control more of the workflows, then I think it's harder to displace you. If you think about Salesforce and where they sit and the system of record, we may see layers on top that will pull data from them evolve quite quickly. But But I think just displacing Salesforce is just going to be so hard. Like you've built on that for like 15, 20 years. And, they're obviously building their own new AI products on top. So I think they'll evolve. So I don't think it's like the SaaS apocalypse. The SaaS companies have to evolve into something different. They have to leverage more of the tooling. They have to like I said, go deeper into workflows and all that. And some will survive and some won't. But I think a broad market correction across everyone is overblown.
Yeah. I'd love to wrap up with some fast questions, rapid fire. What's one technical misconception founders consistently have about enterprise buyers?
Technical misconception. I don't know if this is the answer to your question, but one of the things that I see a lot is people underestimate the integration work that's needed to get a customer live. And this happens a lot where they see signing a customer as sort of a big win. And it is a win and you should celebrate. But I say that moment when you sign the contract is the moment of highest stress for your customer, because they just agreed to work with the startup and they don't know if this thing is actually going to work. So one of the things we advise a lot of our companies is get the deployment done as fast as possible. And it's not, if it takes weeks, like it's just adding a lot of risk. So I don't know if this is a technical misconception, but like I think not enough focus is put on deployment, integration, timeline, and we push a lot to shorten that.
Speaking of deployment, there's been a recent rise of forward deployed engineers in the field. Is that going to be more important, less important, or just as important going in the next few years?
I think it's going to be more important. And I think it's a model I think more companies should take, because as I said, with the models, with the AI models, not everything today is completely like, it's not like software, 100% predictable. If this is what the code says, this is what the code will do. So being in that environment, understanding workflows, trying to get your hands into more of the things that you can build quickly matters a lot. And in some ways, it's the old model of having customer support and success. But with SaaS, it was more straightforward. You know what your product did, you deployed it online. It's not like you have to do a ton of work after that. But I think with the capability of these models, you should have people, especially in your large customers, trying to make sure they're successful. Like this is a big thing, right? In go to market, like it's not selling the product. Ultimately, the goal is how do I make my champion look like a hero? Because if you can do that, that customer and champion will be very sticky and they'll be a great reference for you. And I think that's even more important given how quickly companies are growing and how rapidly sales cycles are changing with AI.
Yeah.
So I think we should do more of that.
Yeah. In cybersecurity, where's the next CrowdStrike-sized opportunity hiding?
I mean, I think a lot of it has to do with, well, maybe two areas, right? One, I think broadly across application security and how much AI can solve for that, I think will be a big trend in the next few years, because that's such a large attack surface. And if AI can meaningfully solve a lot of the application security or address a lot of the risks in the application security, I think that's one. I think the second one is more consumer, is what happens to consumer security, like our passwords, our logins, everything with AI. Like I think because
agentic security, basically.
Yeah, because the volume of attacks have increased so much that how can we get consumers to better protect themselves? Because if you think we had scams before, now with AI, it's like 10x.
I saw a meme. It was a really funny meme on X. It was something like, all we have to do is just ask their AI really nicely for their password.
Yeah, exactly, right? So how do you build the next generation of consumer security companies that protect their users from the new threats that are coming? I think there's probably a big company out there somewhere.
Is there an enterprise workflow that you see that is still painfully manual and overlooked?
I think an enterprise workflow, I want to say something on the service maintenance side. It depends on the vertical too in some cases. I'll give you maybe a slightly different example, and I am going to list one of my companies here.
You can talk your book on this podcast. It's totally fine.
There's a company called Compa in our portfolio. It's a really interesting company, and they do compensation management and intelligence. I really like this use case because if you think about it, what compensation teams do is incredible work, and compensation tends to be 80% of a company's budget, right? Paying people. But typically these teams don't have a lot of people. The compensation teams are small,
right?
And they do a lot of manual work to figure out how much should an offer be, how do I plan for the year? Like, how do I plan out my budget for hiring for this year? They often have to go work with sales, marketing, engineering. How many people are going to hire? Like, what should we plan for this? Oh, the market for AI engineers changed. Now we have to offer, I don't know, $1 million bonuses or something, right? So
Well, I think there's this interesting thing too, where I think it was about in the 70s. I think Congress passed a law or the SEC passed a law where you had to disclose executive salaries. I think this was around like 1970,
Yeah.
and from that point forward, you saw this just astronomical increase in executive salaries. And it's like, why is that? Well, it's because executives could look and see what everybody else was making. You literally had to disclose it if you're a public company. Any officer of the company, exactly what their stock options are, exactly what their comp is, right? And I think something similar has happened in the last 10 or 15 years with online kind of tools like Levels and others, where you can actually see, oh, a level 7 engineer at that company makes that. I want that.
Yeah.
So creating the transparency has actually increased the worker's ability, the labor, the employee's ability to negotiate.
Right. So anyway, I think compensation is one workflow which is heavily manual. It's not a broad answer to your question, but I think it's an interesting one because it's often not thought of as much.
Yeah, some of the best startup ideas are just kind of taking things that are just done manually and just AI powered SaaSifying them.
Exactly. Yeah.
Like, oh, they're doing this in spreadsheets. Great.
Especially in certain industries, right? You take healthcare or oil and gas, like you said. I mean, there's some back office that's responsible for getting a wheelchair out to a patient, right? Or getting a piece of equipment delivered at the right time. And it is mission critical, but it's buried somewhere in the entire workflow that you never think about.
Yeah. What's an early stage metric you trust the least?
That I trust the least? I would say, I think ARR the definition of ARR has changed so much over what it originally meant, right? Like true recurring revenue that's signed and contracted. I think we see ARR put in every deck today, but what it means varies a lot between being usage based, or it's contracted but not live. This is if you take our monthly number and annualize it, like this is how much it would be. So there's many variations of what the ARR number is. So I think you have to dig in a little bit to understand what exactly.
Yeah, what are we talking about here?
About
you took your highest usage day last month and you multiply it by 365. That'd be probably the most egregious.
Yeah. So that I would say is one that.
Yeah. That's funny. If you could institutionalize one habit in every early stage founder, what would it be? I would say, I think most early stage founders do this already, but I would say as a company scales, to continue staying very close to the customers. So this is maybe not very early stage, but if you get to a B, C rounds and your role changes, and it should change, you have a full team underneath you, right? But I think the best companies, the founders are still very involved with customers. They still do customer calls, they take support calls, they go meet, because you never lose that pulse on the business. I would say, one of the things that does happen sometimes is you have a founder when they're early, they know every aspect of the business, every number, every customer. And obviously you can't do that as you scale. But as you put layers between the founders and the customers, that perspective changes. And if you go back to something I said earlier about having that product vision, one of the best things that a founder brings to the table is their vision for how this market should evolve and what product needs to exist in it, and how do you build towards that future. And I think the further away you get from customers, you lose a little bit of that vision because you're not just getting the raw data anymore. So a lot of founders do this already, but if I had to say that's something important that you should continue doing, I would say it's that. Love that. Is there a vertical in SaaS or enterprise that you feel is underappreciated or inversely overcapitalized right now?
I think I would say retail is probably underappreciated to a certain extent. To think physical stores, and this may be unfair. I'm sure there's a lot of retail startups now that are like, what do you mean? But if you think about physical stores, gas stations, convenience store, like that's a huge footprint across the country, and they are slow to adopt. There's obvious reasons why it's hard to break into that, but that's probably an underappreciated one. I think go-to-market tech broadly is overcapitalized. There's so many startups building to automate, and there's good reasons, right? It's a very clear workflow. It's easy to test, easy to get into. But that's what I would say. My first instinct was to say healthcare, but I think healthcare is not undercapitalized. There's a lot of healthcare startups out there. It is a very difficult sector to get into and just manage everything that goes on in that sector. But yeah, that's what I would say.
What's something you've changed your mind on since you started investing? You were kind of sure it was true, and then you're like, no, it's actually not true.
I think we tend to underestimate market sizes. Early in my career, I would be like, this can't be a big market, right? I would do some diligence and be like, but I think this is not true of everything, but I think a lot of markets grow over time. So there's value in being a significant, if you can capture a significant pocket of a small market, as long as the market grows and there's a tailwind, I think you can build very big businesses. And I didn't appreciate that enough in the early days. So when we think about markets, we try to be very careful about.
Are you guys more thinking bottoms up? You kind of start from like first principles, like how many people have this problem, or how many companies, how much would they pay to solve it, over what period of time, kind of thing? Yeah,
exactly like that, right? But I think because especially in markets that are late to tech adoption, because such products have not existed, even the market doesn't know that there's a lot more you can do, right? Like you launch your first automation feature and they're like, oh, this thing can actually be automated. Like let's take let's take oil and gas, since you mentioned that earlier, right? And I don't know much about oil and gas, so I'm just sort of talking randomly here, but like very manual, very complex. But I do think if you bring automation, there's probably things that will open up over time, whether it's finding the location to drill in, whether it's the right infrastructure to build, whether it's around shipping, whether it's about analytics, that you may be able to do things that are not possible now because of the technology that came in. So
you can bundle inside the vertical, basically.
Yeah, and I think your initial hypothesis on how much you could sell a company's products for can grow. I mean, the price point can grow significantly that may not have been obvious initially.
Well, yeah, what is a good rule of thumb from like a $10-20 million company to a $1 billion company? How much do they expand their ACV over time, over those 5 to 10 years?
Yeah, so I would say we've seen companies that have grown at least like Next.
Yeah, so they started with a 10,000 a year product and they went to 100,000 a year product, or 100,000 to $1 million.
There's a cascade, right? You'll get a few customers who'll pay you $1 million because they're at certain scale and all that. But I think there's two ways to play this. One is you find a very efficient go-to-market to land, and if it's truly efficient, I think you can get away with like small price points. But if you have a good product roadmap and you know you can get expansion, then it's okay to be inefficient upfront, because your net retention will grow significantly, right? So your net retention will grow your revenue significantly. So you can do either ones, but I think it's hard if you stay at a low price point, because then you need tens of thousands of customers, right? And obviously there's those companies that have sold and gotten at scale. It's just hard. So yeah, I think markets tend to be bigger than most people think they are, at least in the early days, because technology changes the buyer behavior and what they buy in those markets.
So I'll ask kind of a similar question in a different way. What's something that you believe to be true that's a contrarian belief that most people believe to be false? Most people wouldn't agree with you.
I'll give you two answers. I don't know if this is exactly what you're looking for. So one is like the job loss thing, right? I don't know if it's truly contrarian, but like
I agree with you there. I think there's actually going to be more jobs than ever created in the next 10 years. We're going to invent so many new things to do. Yeah. And people just it's kind of like trying to explain to farmers what we're going to do in factories.
Right.
In the 1800s, they're like, wait, we're going to be in a building, like, on an assembly line, like with a wrench in our hands. Like, I don't understand why.
That farms.
Well, won't all the machines be building everything?
Yeah.
No, there'll be like things to do. Like we'll be selling the machines to each other and servicing them and like maintaining them. And like, it'll be hard to explain to people what we'll do in a post AI world. Like, it's just hard to explain.
It's just
it's hard to have that imagination too,
right? Because it changes so quickly, right? Like, I mean, imagine technology change over 20. Like, I mean, in 1990s, would you have imagined everything we have today?
And
right?
and the jobs are going to be so much more incredible, because all the mundane, bureaucratic, lined up in cubicle work is going to disappear, and it's going to be very creative and very collaborative, and everybody's going to have so much leverage now with AI.
That's right, exactly. So that would be my main thing. I think the second thing is, I don't know if this is contrarian, but like, I think this is like one of the best times to invest in venture. I mean, there's obviously fear globally with prices being too high.
Right. We got a war now in the Middle East.
Exactly, right? But I think the pace of innovation is so high that early stage companies, somebody asked me the other day, so many people are starting companies and it's getting easier to start a company. Like, should I start a company now? Like, everybody else is starting a company and it's so competitive. And at least my view is, I think it'll get easier and easier to start a company. Like, I think waiting doesn't help if that's your concern.
That's what I tell young people. They're like, hey, should I get an MBA? And I'm like, nope, start a company. Should I go work for Microsoft? I'm like, nope, start a company. Like, it's just never been easier to just start a company. Get somebody you like to work with and go talk to customers and figure out what their problems are and go build it for them. It's as simple as that.
That's right.
And now you can vibe code it. You can just get
Yeah.
Claude Code to,
Yeah.
you know, go figure it out. And then you'll just get more technical over time. You'll go deeper in the stack and you'll
And-
expand your ACV, all that stuff.
As you mentioned earlier, the learning around how do you sell, how do you service a customer, how do you manage your finances, like all of that is so valuable, no matter what you do in life, right? Like selling is a good skill no matter what you do in life.
Right. And VCs are, I tell people, VCs are just salespeople.
Yeah. Both to founders and then
basically all we do.
as well.
We sell founders and taking our money, and we sell LPs on giving us money. That's basically a sales job. And we sell people on, to come on podcasts so we can learn for free and get a free education.
Was a pleasure, so thank you.
But I really enjoyed the conversation. I learned a ton. This is, you know, I love doing this podcast because I just learn. I feel like every time I have a VC on like you, that's, you know, been doing this for a long time, longer than me. I take away nuggets, and I get to improve my craft, my skill. So thank you so much for coming on. I learned a lot.
Thank you.
Thanks, Arun.
All right. Take care. Bye.